What is up, ladies and gentlemen? We are about to start here the session with Mark Putrino for the Benzinga Trading School. I believe Mark is behind the scenes right now. I believe so. Guys, go ahead in the chat. You guys already told us Canada, Ontario, North Carolina, New Jersey, California. What's up, Mark? What's up, Nathan?
Hey, man. Adding Connecticut for me. That's where I am.
Connecticut. Very nice. That's very nice. So we have people. Oh, somebody from Vegas. That's nice. Mark, yeah, so it was an interesting conversation here before we hopped on. You were talking about a couple themes there. We'll be going over that later on, but for those that are not familiar with your background, if you don't mind, share with everybody your experience in Wall Street, what you did in in the firms and all that stuff for the folks here.
All right. Well, first of all, I would like to thank everyone for coming in or tuning by. I am Mark. My name is Mark Putrino. I'm the head instructor at the Benzinga Trading School, and I think I have a good background for this role. I have a good resume. I spent a lot of my time in the institutional world, about 25 years, and my first trading position was with a guy by the name of Mario Gabelli, who you may recognize his name, and I also traded for a guy named Steve Cohen, who now is famous for owning the Mets. So, I have a pretty sophisticated background, not sophisticated, but I should say an experienced background. So what I want to do is take my knowledge and bring it to the trading school, because when I first thought about getting out of the business about 5 years ago, or maybe doing something else, I wasn't sure what to do, right? But then I started looking online and, different trading things, and I was doing things, and I saw all these advertisements for these trading schools or trading idea things that it kind of struck me as like, man, that's kind of, I would question that. So I have a lot of experience. And one of the things I think about the background of the institutional traders, the hedge fund traders, like where my background is that a lot of this stuff is so much more simple and so much more simple and logical than a lot of people think. Like, a lot of people think that all these hedge fund managers, like a guy like a Steve Cohen or a Mario Gabelli, have these secret models or some infallible trading system that they use to make their profits. And I would see this online. There's some YouTube video or someone's like, all right, I could show you how to make $1 million out of 10,000 in like 3 days, and they got their Lamborghini in the background, and they got the big mansion in the background. So I felt that there was this need to teach things, to like how trading really works, dispel the myth and all of this stuff. And so I make a long story short, I ended up at the Benzinga Trading School. So I think one of the good things about the school, or why I would ask you to give the school a chance, is that I have a pretty in-depth background. And another thing that we do with the school is we also look at stuff in real time. We're not really looking at like, oh, here's a chart of what I said 5 or 6 years ago, or this or that. So we like to take the not necessarily common sense, but logical principles. We don't have sophisticated methods or this or that. We have logic and common sense, and the students have been using it, and some of the students have been doing very well. What is logic and common sense? Well, let's look at what level is a support level. Look at what level is resistance level. The 3 most important things in the market, I think, for someone Excuse me, just want to get a little water. The three things I think most investors who get started need to understand is this. If you're thinking about being a trader or a day trader, which this class is really good for, is this: you need to understand in the markets that there are certain price levels that are more important than others. Okay. Sometimes we know why these levels are important, sometimes we don't. But there are certain price levels that are more important than others. That's just the way it is. You know, sometimes we know, sometimes we don't know. I will show you. So I am going to show you just an example just to get started. And I'm going to be here with you for a while. I really like doing this and I like teaching people. All right, so the first thing I'm going to do here is bring up oil. And this will show you a thing about levels. Now, in this school, I am here to introduce the trading school, the Benzinga Trading School, which I'm very proud of and I take a lot of pride in. And we have classes where we focus on the fundamentals. We have 8 classes, and at the end of each class discusses a fundamental of trading. The first class is the philosophy, we talk about it. The second class is levels. Now, this isn't like, you know, secret guru ninja trader stuff. This is common sense things. And in the institutional world, I will tell you firsthand, because I was there for a long time, is that the institutional hedge fund traders, contrary to what some people listening right now may think, it's very different. There is no like secret sauce or secret method. What we do is we look for important levels. So that's one of the classes, is levels. And then the other classes are, we look at trends, we look at momentum, we look at patterns. But right now, let's just talk about levels. Because if you never visit, you know, if you never hear me again, or you don't subscribe to the trading school, this alone right here, I think, pays for the admission. Oil. Okay, oil. We all know what oil is. We all have our cars and we all, see the news. Now look at this. You don't need to be a chart guru to see this level in oil is important. All right. This blue line here is the 62.50 level.
If I'm not mistaken, Mark, you called that $60 bottom. I think it was in one of these sessions, like in August, around there.
Yes, you're exactly right. And I will explain why. And it's not, it's not anything magical or mystical. So what Rodrigo was referring to was back here I remember the one thing I remember was I don't know if it was a Saturday or Sunday, but we had a webinar and we talked about, well, gee, it looked like oil was going to find a bottom. Why? Did we have like this massive mathematical and artificial intelligence program going on or anything like that? No, we just focused on simple fundamentals of the market. One of the simple fundamentals is some price levels are more important than others. This 62.50-ish level, 62.50, I say ish because, it's it can never be 100% precise, was a bottom here in May. Oil sold off and it found a bottom and then it rallied. So when the market was in a free fall in August, for whatever reason it was, I don't even remember now, maybe it had something to do with COVID. We had our webinar, we talked about, well, gee, now is probably a good time to considering buying oil because it's oversold and it's at support. Now, let's talk about these two concepts because they're important. Support. You have probably heard about support. Support is a level where there are more buy orders than sell orders. There's more demand than there is supply for the stock. All right. So when something gets to a support level, the sellers could sell all they need. They don't need to worry about driving the price any lower. Here, if you were trying to sell oil And we're not just, and believe me, people, we're not just talking about oil. We will show you how to apply this to the stock market, to ETFs and so forth. But, here oil starts to head lower. And if you are a seller, you want to maybe sell at 72 or 71, but you can't. The only price you can sell at is 7. You have to accept discounts. Just like when you're buying something, you have to pay premiums if there's no sellers around. But anyway, when we get to the support level, there's a lot of buyers. There's enough demand to absorb all of the supply. At the same time that this happened, oil was oversold. Oversold, overbought. These are other terms you have probably heard. Every stock, commodity, whatever it is, has its own kind of, personality. And within that personality is what's its typical trading range. Like historically, where does this thing typically trade? How volatile is it? If it gets above that range, it's what we called overbought. If it gets below that range, it's called oversold. Why do we care about this? We care because when things get overbought or oversold, there is a tendency for them to revert or reverse or go back to the average. Just like anything, stock market, this, that, other markets, when things get out of equilibrium or when things get an extreme one way or another, they tend to revert or reverse. So in the stock market, we can use this concept to help us make money. So at the same time that we reached a support level where there was enough demand to absorb all the supply, we were oversold. These oversold conditions attracted buyers into the market, traders, not people that want to buy oil and hold it for 10 years, but people that think, all right, well, I can buy it and sell it in 2 weeks. So that ended up being a very good call, right? And it's nothing complicated. It's we're oversold, we're at support. So now let's fast forward to not August, but over the last few weeks. And this is another thing that a lot of our students were really able to really trade really well, Rodrigo, in really, short period of time. So that was pretty cool. But anyway, so we come into this, like, I don't know if you remember now, the day after Thanksgiving. In the United States, there's a holiday, which is Thursday, and it's an off day. And then Friday is a really short day. So it's not very much liquidity. Regardless, this was the day where there was this big move because of the perception of the new COVID variant. Anyway, oil goes into complete free fall. We get to this day, December 2nd, it goes all the way down. And what happens? Just like back here, all right, just like back here, it got oversold. This is a simple RSI indicator. It's called Relative Strength Index. It's in Benzinga Pro, pretty much any standard charting software package that I know about. It includes a simple indicator. What this thing does is measures how far a stock has moved in 14 days. I talked about the typical trading range, right? If a stock hasn't kind of really moved in 14 days, if 14 days ago, if 2 weeks ago, it was at, 10 and now it's at 1050, well, the momentum is going to be kind of neutral. But when something gets to an extreme, right, either well below or well above, we look for the reversion. So right here, we got oversold, we got to support. What happened on December 2nd? We got oversold, right? You can see this down here. I use this little red circular thing. Come on, one more. All right, we're gonna give it one more try here. At the same time that we reached a support level. So to revisit, we're in May. Oil gets to, let's call it 61.50. It rallies. Now we're in August. Oil goes into this big sell-off. What happens? It gets to 61.50. It gets oversold. It rallies. What happens here over Thanksgiving? We get this new, COVID worry, I guess. What happens? We get a big sell. It gets oversold? Where do we find support? Right around 61.50. So you don't need to be a guru or like some master trader to see that there are certain levels that are more important than others. And this is a perfect example, right? I didn't back, when Rodrigo and I did that webinar back in late August, I didn't say, well, it's time to buy oil because I'm some super genius or I have some secret system or method or this or that or the other thing. I said, well, we're oversold. We're at a level that was support. There's a good chance we rally. And the same thing happened here in early December. It's the same thesis. We're not writing a PhD on, the oil basin or how much oil was in Saudi Arabia or Venezuela. It's just, we're traders.
Mark, this was an amazing trade from the oil, but what about the update on the SPY trade? When I believe that was when everything was falling apart, basically.
Yeah, we always look at SPY in the class. Now, SPY is this SPY. It's called the spider, right? SPY, SPY. This follows the S&P 500. The S&P 500 is pretty much I would guess the most followed benchmark on Wall Street. So we always kind of look at this, and people say to me like, gee, Mark, how do you make such great calls? How do you always know where the bottom is? Where the top is? Well, first of all, I don't. But second of all, why do I make great calls? I don't. I just talk about what the market is telling me to do. I'm not guessing. And that's one of the things that we talk about in the class. Now, excuse me, let's go back to when the class started, Rodrigo, right? One of the main or recurring themes or main things we talked about then was, well, SPY was in a downtrend. The market was going lower. We thought, all right, well, market's going lower. Where is the bottom? That's what stock investors do, right? Market's going lower. Where's the bottom? That's when we know to buy. So around when the class started, we discussed, well, where can this, possibly end? Certain levels are more important than others. A level could be a support level. It could be a resistance level. It could be a level that turns from resistance to support. It could be a level that turns from support into resistance. All right. It could be a level that was support before it becomes support again. Some levels aren't important. The stock might just blow through it. It's like, yeah, whatever, doesn't matter. Some levels are important, some levels aren't. So when we came into the class here, we were looking like, where is there going to be a low for SPY? All right, where will this thing find a bottom? So what level came to, what level kind of appeared was this $425 level. All right. It was, why is this level important? I don't know. It has a nice roundness to it, 425. But for some reason in June, when SPY got to 425, it hit resistance and it sold off. Then in July, this particular level became support. So when the market was in a sell-off, what we do is we look back into history. This is what we're doing. This is, late September. We're looking back into history. We're saying, well, gee, where did the market have important levels before? 425. Where was the low in this sell-off on this day? 426. To within 1 point. we were able to, call a bottom or take advantage of a bottom. I'm not like here patting myself on the back or anything like that. What I want to do is convey one of the main lessons of the trading school is that we don't guess. We let the market tell us what to do. So now let's move fast forward. We got up here in early November, and there were reasons that we had a feeling this was a top. At least temporarily, the market became very overbought. So then we go into this sell-off right after the COVID whole thing, right? We just talked about. Now, where would we expect, or not well, yeah, I guess expect is a good word, but where would be a logical place to look for support? Well, we know that certain levels are more important than others. The 453 level here for SPY was really important, right? That's where we hit resistance. Levels that were resistance can become support. That's exactly what happened here. So when we went into this sell-off, we were thinking, all right, well, gee, where is SPY gonna find support? Well, 440, I don't know. 460, I don't know. 435. Well, wait a second. If we look here, the 453 level, well, gee, that's an important level. For some reason, in this time frame, 449 is important. 448 is important. So we had a little bit of volatility on the Friday, the 3rd. The close was exactly at 453, and we rallied. So now let's fast forward to kind of where we are now. So we rally as a class. We talk about, December 10th, which was a week or so ago. All right, we're in this rally. Where is there a chance where we could possibly find where is there a chance where we could possibly find some resistance? Well, 470, resistance here. For some reason, 470 is an important level. Why is it not 475? Why is it not 471? I don't know. The market, I don't need to know. I don't need to guess. The market told me. The market told me 470 is important. How did it tell me? Well, after this big move higher, that's where we hit resistance. That's here where we hit resistance. So we had this, move higher. So anyway, let's flash forward to this morning. I wake up, I put on the financial news, first thing I do every day. And everyone's like, oh, markets are soaring, blah, 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 blah. The news out of the Fed was good, tapering this, blah, 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 yada, yada, yada. But we know that SPY was pretty much at a really important level. It was vulnerable to make a turn. It didn't exceed the most recent high, which was back here on November 22nd. So within a few hours today, SPY had reversed. And it really didn't come as a surprise to our students because there were some things setting up in the market that were giving bearish signals. One is the flight to safety. There has been a significant flight to safety going on over the past week or 2 weeks. What is a flight to safety? You may have heard this term before. All right. A flight to safety is people think the market is, the rally is starting to come to an end. So I want to take my money out of risky things and go into safe things. What's risky? Who knows? Like nanotechnology, biotech, risky stuff. What is safe? Consumer staples are safe, for example. A consumer staple is something people need, like medicine. Regardless of what the economy is doing, people are going to buy consumer staple stocks versus a luxury item like a diamond ring, right? You might not buy diamonds if they're low, if things aren't good, because you don't really need a diamond, but you do need medicine. So people shift their money into sectors that are perceived, and I want to emphasize that perceived, not necessarily guaranteed, are perceived to be safer. So the S&P is 11 sectors. I am going to show you now the consumer staples sector. And
Really
you
quick,
do
Mark.
not need to be a chart person to see that something.
Hey, Mark. We're getting here a couple questions about the trading school. So I'm just, before we get into all that
Okay, cool.
deep information that you're going to be sharing. Yeah, let me just show them the school really quick. 1 second. Can you see that, Mark? The homepage?
Yeah.
Yes, guys, for those of you that are asking questions about the school, this is the homepage. You have all of the lessons here, the Friday office hours recorded, all of the chapters, introduction and philosophy, investment psychology. That's my favorite one. Market principles, analysis, sentiment. The sentiment part, very important. So you go over all of this from the perspective of Mark Putrino being, in the trading world in Wall Street for decades. So basically teaching you how to trade, also a CMT, chartered market technician for like 20 years, Mark, 21, something like that.
I don't know, Rodrigo, longer than I care to remember, but yeah, that sounds about right.
Sounds about right. Yeah. So you have all of the lessons here, guys, recorded. These are hour long plus sessions. Live class, that's where it takes it to the actual live sessions. You have a chat room there where you basically have the conversation only about the classes, like regarding the lesson. You have quizzes here. You have chat rooms that are for everyone, and chat rooms where Mark Putrino is posting his trade ideas. So only his trade ideas. That way, it's a cleaner chat, and you only get to see the trade setups that he's posting. Also, it does come with the Benzinga Pro, which is what you're seeing here in the chart, like the spy here. But I think that covers some of the questions, guys. Let's go ahead and get on with the education. I don't want to take too much time out of that with this, guys. So let's go ahead and get on, Mark, with the lesson.
All right, sounds good. So a lot of people ask me, and obviously this is why people are here, is do you share trading ideas? And the answer is yes. I mean, basically that's all we talk about for 2 hours every morning, various things that, might be about to move. We want to look for things that are going to move. We want things that are out of equilibrium, right? You might have heard the term technical analysis. Personally, I think that term it's not the term I use. I don't know. I think it's too encompassing or whatever. Doesn't really explain what we do. What I do, I call market equilibrium analysis. And that's what we do in our trading school. We want to understand markets that are in equilibrium or not in equilibrium. If a market's in equilibrium, we don't care. It's not going to move. It's in equilibrium. If a market is out of equilibrium, well, then that gets our juices flowing, because out of equilibrium things move one way or another. We don't know which way, it depends on the situation. But now let's go back to this flight of safety, right? So people might be thinking, well, gee, it seems like Mark has this bearish tone on the market. Am I going to be able to make money? Yeah. I mean, as traders, we, in theory, are kind of market agnostic. I mean, if we're doing what we can do right, we can make money if the market's going down. If we're doing it right, we can make money if the markets go up. So now we're going to go back to this flight of safety I talk about. The flight of safety again. People are, starting to sell some of the tech stocks. I mean, look, this is Apple, right? obviously I would be willing to guess you've heard of this stock. I mean, this is today. This is a nasty day, right? These rectangles that are horizontal each represent 1 day of trading. A blue day is a day where the close is higher than the open. It's an up day. A red day is a day where the close is higher than the open. All right, let me say that again, just to make sure. So a blue day, the close is higher than the open. A red day, the close is lower than the open. So think about it like a football team here or an army. The blue team is in charge. These are the up days. These are the bulls. On the days that are blue, the bulls are in charge. Bulls are buyers. They want it to go higher. They're buying. Now we get up here and we have a big red day, which is a down day. We had a little bit of a rebound yesterday, but this is today. This is Apple today. Apple opened around 179.30. It closed down around 172. It had a big ugly reversal. So what happens when money comes out of tech stocks or the risky stuff? Or what I mean, there are so many stocks that were that were meme stock, stocks de jour or whatever you want to say, whatever the term is, that were so in favor. Like, for instance, like PayPal is one of them. Like, this is where PayPal got jacked up during the whole Reddit thing, like last January and February. Now look, it's really kind of gone down. So anyway, when the money comes out of these stocks that are perceived as risky, it goes into stocks that are perceived as being safer. And that's why this consumer staples thing has really gone nuts. Eventually, this will reverse. Moves like this are not sustainable. They run out of steam. We're talking about consumer staples that have gone from December 1st to now are up almost 10%. That's like a biotech stock. All right. I mean, this is what I think is a flight to safety, which is a characteristic of a top of the market. A lot of people these last few days have actually been asking me about GameStop and AMC because, GameStop and AMC were obviously big names last year when this whole, day trading craze started, and they've each been getting crushed. Right. I mean, this is AMC on, and, don't hate me if I say something bad about your stock. I know people get a little touchy when it comes to AMC and GameStop, but I'm just telling you what is going on in the market. So November 22nd, GameStop was 41. It had this big move, but now the rally's kind of fizzling out, right? What's even more instructive or illustrative from an educational point of view is GameStop. Because GameStop, there's an important level in play. I just said before, certain levels are more important than others. Some levels are important, some levels aren't. If you know what levels are important, you're going to be, 80% of the way there to being able to trade successfully. It's not a secret system. I'm not telling you to use calculus and my secret method and my secret basket of this and that. What I'm telling you to do is figure out what levels in your stock are important. All right. Now in GameStop, why was 150 important? Well, it's a round level. It's a round price. People like to buy or sell at round levels. So back in August, GameStop had this sell-off and it stopped going lower around 150. There was support at 150. Support means there's a lot of buyers. There's enough buyers to absorb all of the demand. People that bought GameStop in August at 150 were, really happy. I don't know if there are people out there listening right now that bought GameStop at 150. But I would like to say too, feel free to ask questions and let us know how we're doing, because we want people that are in the school to be happy, to learn stuff, to learn these basic fundamentals, because this is what you need, is the fundamentals. It doesn't need to be too complicated or esoteric. So now let's think about this. Everyone has had buyer's remorse. It could be in the stock market, or it could be in anything. It could be in a shirt. You bought a shirt, you thought it looked really nice. All of a sudden you get home and it's like, man, this shirt isn't as nice as I thought. You regret buying it. Well, in the stock market, buyer's remorse is something that can help us figure out what levels are important and hence lead to profits. So people bought GameStop around 150 in August. It moved higher. These investors who didn't sell were happy. Gee, I bought it at 150. Now it's at 220. Goes down a little bit, but they're still, having a great profit. Goes up 245. Awesome. These people think, oh, gee, trading is easy. Stock goes lower. Now it goes back through their level. What happens? Well, gee, a lot of the people that bought here, now all of a sudden they experience this buyer's remorse. They say, I made a mistake. I shouldn't have bought GameStop. I thought it was a good buy at 150. Now it's at 140. Man, whatever. I want to get out of it, but I don't want to take a loss. So what do these people do? They place their sell orders at the same level that they bought at. In this instance, it's 150. So what was a support level converted into a resistance level? Now, for an astute trader, when this route, when GameStop got down to 130 the other day on Tuesday and started to rally, short-term traders might have said, well, gee, where is this thing going to run into resistance? The level I would have looked at is 150. Well, because there are potentially a lot of remorseful buyers trying to bail out of their stock. So this is an example of how levels that were support can become resistance. Now I'm going to bring up something that is, probably not on most people's radar screen, but it's a really good example of what I'm talking about. So look at InvestNet if you can. The symbol is ENV, right? I don't really know too much about this stock. There's some kind of, technology company. But let's look at this stock, because we want to talk about levels that are important. I mean, look at this, right? I have here, this black line is a $75 level. September of 20 support. November of 20 support. Crashes through it. What happens? Well, all of a sudden this level becomes resistance. Why? Buyer's remorse, just like we talked about in GameStop. Investors bought here at 75, and they bought here at 75. Stock rallies. They think, man, I made a good decision, making money. But then what happens when the stock falls falls right back through it, assuming these investors didn't sell? Now you have a lot of investors who bought here are now going to be remorseful. The stock is lower, the price is lower. Now they're losing money. What do? They say to themselves, I want out of this thing. I made a mistake, but I'm not going to lose money on it. So I'm going to place my sell order at the same level I bought at, 75. If there are enough of those sell orders, the level that was previously support becomes resistance. That's what happened here. 75 in September of 20 was support. November of 20 was support. In April, it becomes resistance. Now, you don't need to be a chart guru or a, Harvard PhD or, some kind of super guru, whatever, to understand that concept. We all know what buyer's remorse is. We've all experienced it in our personal lives for various things. Here in the stock market, we can see that human emotion or that human characteristic manifest itself in this conversion of what was support becoming resistance, right? So
Mark,
now we
hey, Mark, since you are on that topic, I think it's a great segue where you can talk about the investment psychology part.
investment psychology is probably the most neglected part of most people's investment thinking, but yet it's probably the most important, because the reason why most investors lose money is because they let their emotions take control of themselves. They don't think logically. They see something in a chat room or in social media, and they think like, XYZ is going to 1 million. It's like, they'll get all jacked up. One of the things that I think is kind of interesting about human psychology is that certain people, and I'm not particularly pointing at certain people, but a lot of people, say you want to buy a new, dryer, a new clothes dryer for, you're going to put in your laundry room. There are, there are people that will spend weeks and weeks and weeks researching what's the best dryer for me to buy. What's the best price? What's the best guarantee? Should I spend $400? Should I spend $500? And they'll think about this for like 2 or 3 weeks. But when it comes to the stock market, someone will just say, oh, gee, you should buy XYZ because, Joe Cat, or, whatever the kitty's name was, Joe Kitty, in this chat room somewhere says, well, you should buy it. And then they'll put 10 grand on the line without even thinking about it. It's amazing. They use this meticulous kind of analysis for, their clothes dryer. But when it comes to money, kind of the normal rules of rationality go out the window. So most people lose money because they don't understand that. They don't understand they need a plan. You can see human emotion making you do ridiculous things in various aspects of life, not just the stock market, but in anything. Clothes, for example. Like, why does someone think a particular shirt is nice? Or why does someone think a tie is nice? I don't know. Maybe the tie is nice, maybe the tie is not as nice, but people still think that, tie is nice because it's like a social norm, that a tie has been accepted. So we see this like investment psychology stuff all around us. Why is this bad? Because if you're getting caught up in like this herd behavior, it could make you make bad decisions. Now, here's an example that everyone could agree with who drives, right? You're driving down the highway, you come to a toll booth. Everyone is going into this one, bay or booth or whatever you call it. There's 50 cars, out of it. So people pull up, and what do? They get in line. They just assume, all right, well, this is the right line to be in. Okay, fine. They get in line. Someone who could think outside of the herd and can get away from that can think like, well, gee, maybe if I look up around the line, there will be a booth I can go through. And then they look and they see, oh, gee, that has a green light on it. Why shouldn't I go through that? Is anyone else going through it? Well, I'm going to try it. I'm going to do it. And they go through that toll booth. And then all of a sudden, a bunch of cars follow them, right? May sound like a silly example, but it really conveys an important message that humans are influenced by their, herd psychology and herd behavior. How does that apply to the stock market? Well, it applies in a lot of ways. Once you buy a stock or once you get involved, do you become a member of that herd? For example, Tesla, right? Tesla is a really good example because Tesla is a stock where we almost have a person, obviously Elon Musk, who is almost as identified with the stock. So it's kind of easy if you buy Tesla, like, all right, you may not care about Tesla, you couldn't care less about the stock, about the car, about the scientist, about, the hairband from the 80s, you might not care less about Tesla. But now if you buy Tesla, all of a sudden your psychological instinct is going to kind of tell you, oh, Elon Musk is my leader. Or, not that he's your leader, but, I should listen to what Elon Musk says, or I should watch Tesla. Now, in essence, the stock in and of itself becomes the leader of the herd. Like everyone who watches Tesla starts following the stock and they lose their rationality. So I think this is a good thing to go into with Tesla, because this shows something else that we look at in the markets. In addition to psychology, we look at classic patterns. Now, a lot of patterns you've heard of, like I guess I'd have to say the Head and Shoulders is probably undoubtedly the most famous pattern. Some patterns have validity. In my opinion, most don't. One of the patterns that does is a descending triangle. Now, if you are, technician, you might have heard this term before. You might be out there thinking like, oh yeah, chart pattern, blah, 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 just tea leaves. It's not tea leaves if it's interpreted right. It's not astrology. It shows supply and demand dynamics. All right, so now Tesla, I mean, I could spend 3 hours teaching about this stock, but anyway, just look at Tesla. So Tesla gets all the way up here, comes back down to around 1,000, and it's a support level. Why is it support? All right, well, kind of easy to understand. It's $1,000. A lot of people like to buy at round levels, whether they're, beginners, seasoned professionals. They don't want to buy at 1,012 or 1,027. They say if it gets to 1,000, I'll buy it. So we have this wall of buyers that are this. I don't know if wall is the right term, but this floor of buyers. We have a floor. These buyers say to themselves, well, you know what? I want to buy Tesla at 1,000. If it goes to 1,000, I'm going to buy all I can. If it goes higher, I don't really care. I'll just wait. No big deal. I'm not in a rush. So Tesla, goes up, gets to 1,000, rallies. Same buyers come into play here, right? Yeah, if I can pay 1,000, cool. If it goes higher, I won't. Now, this forms the bottom line of what we call this descending triangle, right? This pattern is a triangle. I don't know, it's like an isosceles or whatever. But we can see, we got this angle, we got this line, and this line. So we see here we have complacent buyers, right? As time passes, these buyers are willing to stay at 1,000. They don't really care. They think, all right, well, if the stock comes down, I'll buy it. If not, I won't. Now let's look at the sellers. The sellers are getting increasingly aggressive as time passes. In early November, the lowest anyone would sell this at was 1,200. Then we get to mid-November. Now there are people that are willing to sell at, I'm sorry, did I say, all right, so 1,250. So we get to mid-November, people are willing to sell at 1,900. We get to early December, people are willing to sell at 1,160. So what do we see here? What does this pattern illustrate? It's not tea leaves. It's not, something mystical. It illustrates a dynamic that is occurring in the market, or that occurred in the market. Complacent buyers, aggressive sellers. I don't care what market it is, stock market, real estate market. I don't, maybe you're someone who trades coins or comic books or any collectible. If you have really aggressive sellers and you have complacent buyers, the odds are the price is going to go lower, right? Say you are a comic book, you trade comic books, and all of a sudden, there's this comic book market, and all of a sudden people figure out, well, like some of the ink in comic books is poison. So, but other people think, well, maybe that's just an exaggeration. So now you have buyers who are like, all right, well, maybe I'll buy a comic book. I'm not sure about this news. I'm going to kind of just wait. I'm going to be chill. But then you have the people that want to sell their comic books are like, man, is this poisoning people? Is this poisoning the environment? I better get out of this, man. I'm going to go get the best price I can. So in any market, aggressive sellers can place in buyers sets the stage for the price to move lower. That is what this classic descending triangle pattern shows. The buyers hold firm at 1,000. The sellers are willing to, get more aggressive. So when we got back down to this $1,000 level, what happened? Well, the level broke and the stock went lower. So that is an example, a logical example, not mythology, how these patterns can work. So now let's go to our thing we talked about before. A level that was support can become resistance. And that's kind of what happened here. Today, in the morning, Tesla rallied all the way up to 995. And this morning, like when I woke up, people were like, I put on the financial news and it's just like, oh, the market's rallying, blah, blah, blah. This news is so good. Now, we talk about $1,000. We're talking about 995 within, fractions of a cent. So don't get too caught up on being exactly precise. So this morning, Tesla gets up to 995. What happened? The people that bought back here, well, they have buyer's remorse. They want to sell. So they put their sell orders around 1,000. That put a top to the rally and the stock went lower. Okay. So now we have two interesting things going on here for people that are interested in reading charts. A descending triangle pattern shows an illustration of how, as time passes, we have sellers becoming more aggressive and buyers staying complacent. Aggressive sellers, complacent buyers. Any market is going to have a tendency to make the price go down. The next thing we can see on this chart is this conversion of support to resistance. 1,000 was a support level. It apparently has become a resistance level. Why? People bought at 1,000, have buyer's remorse. They regret their decision when it goes lower. They say to themselves, if this thing gets higher and I can get out at break even or close to it, I'm going to sell. People that bought are now selling. That's why a support level becomes a resistance level. So what's kind of interesting is that this chart here of Tesla gives some really good lessons into how stocks trade and what's going on in the market. Now you're probably saying, all right, well, gee, Mark, where does Tesla go? I think that Tesla is going to get down, at least in the short term. I think it gets to 900 easily, frankly. I mean, this in the aftermarket is trading at 918, so it's getting pretty close. So I just want to talk about this Tesla because I just think it's a good example of how trading doesn't need to be complicated. If we understand these basic concepts of aggressive sellers, complacent buyers, buyer's remorse, seller's remorse, it all manifests itself in the charts. Certain levels are more important than others. We saw it with SPY. We can see it here. We can see it with almost any stock. Like, let's just take a look at Amazon. I mean, the level has kind of become a little bit less important, but as markets evolve, that happens. But for a long time, look.
Hey, Mark, just want to give a shout out to John, William, and Tim here who just joined the trading school.
Cool. Thanks, guys. I appreciate it. I think you're going to be happy you did. All right. So hopefully more people will sign up. This will be a good Christmas present to yourself or a holiday present. So now let's look at, we had mentioned, or I had mentioned, certain levels are more important than others, right? Let's look at Amazon. AMZN. Look at this level down here. This is what? 3,200. With support in May, support in August, support in early October. Now, look at that. I mean, that's pretty profound. You don't need to be a chart guru to see that this is an important level. It was support in June, it was support in August, and it was support in early October. Now, when I say profound, you're probably like, Mark, why are you saying that's profound? Well, it is profound because in academia, and I have a master's in finance, so I've been in academia. In academia, they teach you that markets are efficient. There's random walk. Certain, you can't outperform the markets. That is all not true. Just forget about all that stuff. This chart right here just shows you that some levels are important than others. Markets don't follow a random walk. If markets followed a random walk, the concept of a support level or resistance level would not exist. But yet we look at Amazon and look how tight this is. 3,200 within a few points. This is a stock that is $3,200. Okay. That's a high price. And within a few points, like within less than 10 points, it finds a bottom. Now let's look at another important level. Look at this 3530 level, which goes back to, right? It goes back to August. Amazon rallies to 3530. Okay, cool. Sells off. Now we are in May. All right. So a good, what's that? 9 months later, where does Amazon find resistance? Right at 3530. It's not a coincidence. It found resistance at a place that had been resistance before. Now resistance turns into support. We talked about how support turns into resistance, buyer's remorse. Resistance can turn into support. All right, let me make sure I'm saying this right because I don't want to confuse people. Support can turn into resistance because of buyer's remorse. People buy, it goes lower, they want out, they don't want to take a loss, they place their sell orders at their buying price. Well, with support can become resistance. Now we have the opposite thing happening here, which is very common as well. Resistance becomes support. This is not because of buyer's remorse. This is because of seller's remorse. This is the opposite. People sold here. People sold here. The stock went lower. They thought they made a good decision. It goes higher. Now, all of a sudden, you have sellers who regret selling. A lot of these sellers say to themselves, I want to buy my stock back. I made a mistake. I shouldn't have sold Amazon. But I don't want to pay more than I sold it for. So they place their sell orders. I'm sorry. They place their buy orders at the same level they sold at. And if there's enough of those buy orders, what was resistance becomes support. So we can see it here. Resistance becomes support, becomes resistance. A level that is support maintains its importance. I mean, if you, I'd love it if you all like at least gave the class a chance and signed up. I think you would be happy. But if not, and you leave with one thing tonight, just the fact that knowing that certain price levels are more important than others is, you're like 90% of the way there. I don't know if I want to say that, maybe 80% of the way there. I mean, you could see it like, everywhere. Like let's look at Amazon here. We could pick a random stock and we could find levels. Look at this, 3,700. 3,700. Let's pick a random stock. I don't know what was in the news today.
Let's do Melly here for Christina from the Zoom chat.
Oh, cool. Yeah. What's the symbol?
MELI, Melly.
All right. Now I don't know this stock, Merca Dolbre. All right. Someone's asking about it, so I'm going to look at it. Now, before I bring it up, here's what I'm looking at. Do we see any important levels? Do we see any important trends? Do we see signs that it's overbought or oversold? That's what we're looking for. If we don't see any of that, cool, fine. We'll look for something else to trade. We are looking for things that are about to move. We're looking for things that are out of equilibrium, because if they're out of equilibrium, there's a good chance we have a big move, or I shouldn't say big move, a tradable move. All right, so MELI, I am going to click on it right now and take a look at this chart. All right, let's see. All right, so everybody, MELI, and let's see what we can see here. Can we identify an important level? All right, yes, I can. Now, the first thing the students, the first thing maybe you would see is up here where we have these peaks or tops. Right. So, this is 1970. So in February or January, that's where we found a top. That's exactly where it found a top in September. Now let's get more honed in on where the stock is trading now, because it looks like, is it down because there's some news on it? Maybe that's why you're asking. But I see a certain level that is important that is in play now. And I'm going to go down to here. All right. I'm going to put this black line. This black line is the 1260 level. So 1,260. This was the top in August of 20. When we had this big sell-off in May of 21, that's where the bottom was. Stock broke through it. Where is the high today? Literally 1260. All right. I think I just said 1260. Yeah, 1260. 1260 resistance, support. Where is today's high? It was literally at 1260. It just shows you the importance of a level. On May, the low trade, to be exact, 1262. Today's high trade, 1260. All right, so you might be like, all right, well, gee, Mark, well, that's great. All right. Yeah, there's levels that are important. What am I supposed to do with that? Well, if you were a day trader, for example, when this stock got up to a level that was previously support, you might have started to think, well, gee, if it doesn't break this level, I think I'm gonna sell it. Stocks trade differently around different levels, and that's what traders do. Good traders, they know that certain levels are important. So I'm going to bring up a one-day chart, which is just today. This is this particular stock today. What happened this morning? 5 minutes out of the gate, it got to 1260. Then it started to sell off. So if you were a day trader, you would think like, oh, gee, this thing failed at an important resistance level. When we say failed, we mean it didn't get through it. It got to resistance and it failed. That means it didn't break through it. A lot of times when things fail at resistance, they go lower. So if you were a day trader and you were really astute, none of us are really that great, but say just in theory, you had things were all going well today. You got this top here. You could have rode this thing all the way down, buy puts on it. 1260 goes all the way down to 1180. And what are we doing? I don't even know what this company does. I can barely pronounce it. Mercado Libre. I mean, I don't know. It doesn't isn't Libre like wrestling. Um, but anyway, so we're looking at this important level. For some reason, I don't know why, this is an important level. And this stock did not top out today at 1260 because of a coincidence. It stopped out at 1260 today because it ran into a level that had been support. Support can turn into resistance. Rodrigo, I got to take a 2-minute break and I'll be right back.
Yeah, it sounds good here.
All
Christina
right, cool.
saying that yeah, basically it's like the Amazon of that place. Absolutely. Um, in the meantime, guys, I'm just gonna put the chat room, not the chat room, the school. Yeah, Chusang, they're considered the Amazon of Latin America. That's what, I mean, that's what everybody says about it. Yeah, you guys can check this out as well in your pro. It does come with the trading school if you guys are asking. Hey, Mark, if you can go ahead and take the screen there.
Okay, sorry about
Yeah,
that,
share the
but
charts. All right, no problem, man. You got your chargers back or?
yeah, I'm all set. Sorry about that. Little just a little tiny family crisis I need to take care of. All right, so anyway, so let's go back to this stock here. So well, not any, but on a lot of stocks, when we can look at something, we can see that there are certain levels that are important. All right. I mean, just pick up any stock. Let's pick a random letter. I don't know, E. NSSPA. Now let's see. Do we see levels on this are important? Oops. Yeah, I mean, here's yet another example. We can see that this particular stock, there was an important level right here. This is where it found resistance around 26. This is June of 21. Where did it find support after this sell-off? Drum roll, 26. It didn't stop here just randomly. You know, it wasn't like just some random sell-off or some random buyers came in and bought the stock here. The reason why this was 26 was because it was resistance. Levels that were resistance can become support. We can see this on so many stocks. I know like Naked Brands is a popular stock. Now this is a stock where a level that was support has remained support for a while. All right, so this is NAKD, very popular stock in the day trading world.
You know what's a good stock we should check out, Mark? Let's check a firm. I know that's one that the trading school members got it like at 108, I think. It went all the way up to 170, but right now it went below the 100 level, which I know you said was an important one a while back.
Oh, okay. All right. Well, I'll check that out. All right. Let me just show people a firm here because, I mean, all right, maybe I don't want to overemphasize it, but this just shows you an example of how clear some of these levels can be. This is a support level in Naked Brands, right? It's just perfect support at 50 cents. All right. So let's bring up a firm, AFRM, Firm Holdings. Now let's take a look at this. What are the important levels here? All right, so, well, we know $100 is important because clearly it's a important psychological level, because what could be more of a round level than $100? So when it got here, it was resistance. So then it goes higher, and what happens? People who sold it regret it, so they want to buy it back. Where does it find support? Right at $100. So we have this big kind of reversal today, right? We got as low as 93 and we got as high as 113. But notice where the close was, right? 99.24. It was right where it was a previous high. So resistance became support. And one of my goals for the students, Rodrigo, is that they can look at pretty much, I mean, not any chart, because sometimes levels aren't as clear, but sometimes levels are very clear, like we saw with Tesla, we see here. But if you have this ability, if you can learn how to just like pick out what levels are important, you're, I don't want to say you're 90% of the way there, but you're more than halfway there of figuring out how to develop a profitable trading strategy. It's levels. This is what I tell students: levels, trends, momentum, levels, trends, momentum, levels, trends, momentum. Just repeat that to yourself over and over and over again. When something gets to an important level, typically something happens. It either rebounds or breaks down. When something gets to an important level, it's rare for it to go sideways for a long amount of time. So we're looking for a breakout or a breakdown. That's the type of strategy where like an options trader would use a straddle or some kind of a spread. But, it's almost like it gets to the point where it's almost like, I don't know, like baffling. Like, how could certain levels be so important? I mean, I don't know, man. I don't know. It just is one of those things, and we don't really need to care because, well, we don't need to overthink it, I should say. Now I'm going to bring up PayPal here. A lot of students ask about PayPal. All right, so we can see now PayPal got crushed, right? On December 1st, it got all the way down to 180. Now it's at 190, roughly. Let's just call it. Why did PayPal find the level at 180? Was it just random? I don't know. Did some analysts say it's worth 180? Let's look back to September and October of 20. Where did PayPal find a bottom? We're not talking, we can't be exact or precise, but we're talking about within a few dollars. Look at this. I'm just going to even make it more precise. I'm going to make this 175. Well, whatever, 177. So over a year ago, this level was support. And then when we have this sell-off, where does PayPal just happen to find a level? Pretty much right around the same place. Does this mean it's not going to go lower longer? No. Does it mean that if you were paying attention to this and you were, a day trader or some kind of a short-term trader, and you saw that it had reached a level that had been support before, could you have traded it, made a profit off of it? Well, definitely, man. Hell yes. Especially if you're an option trader. This went from 177 to 197. It's like a 10% move in a week. And how did the traders kind of get an idea that might have been coming? Well, they looked on a chart and saw where we had a bottom before. So, a lot of investing is rocket science. There are these funds that literally have rocket scientists. So it is kind of rocket science, doing all these complex mathematical equations, trying to figure this stuff out. I will tell you, my friends, that they are no better. They might have better credentials or resumes or sound more sophisticated. They have no advantage over people that just do what we do. All these artificial intelligence funds that were so popular 4 or 5 years ago, a lot of them have literally gone out of business because the performance was so terrible. This is another conversation, but in my opinion, it's because a lot of these artificial models are based on probability, and probability assumes people are logical, and that's just not the case. Just to go back to PayPal here, just to show you another example of a level. Again, remember, levels, trends, momentum. Where did PayPal find a top in July of 21? Did it just randomly find a top at what was the high trade on February 16th, 309? I don't think so. It found a top at pretty much the same level that was resistance before. For some reason, this is an important level for this stock. So, here's PayPal. So we just saw like an example of levels. I don't know. I think of another. All right. So I know Ford is in the news because Ford is making new highs. Let's look at Ford and let's talk about levels here might be important. All right. So now let's take a look at Ford Motor Company. Do we see any really levels that are sticking out as really important and are that clear? I don't know. I don't really see any. But let's look at the recent range. And we could maybe find some levels that are more important on the short-term basis. So where do we see a bottom? Like 1920. So this black line is 1920. This has been short-term support. Look at where Ford has found a bottom since early November, around 1920. This is another one of these things where you don't need to be a guru. You can just see 1920. So, this is going to be an important level. If Ford gets back here and it tests it, then it breaks, maybe it goes lower. The levels on the upside aren't as clear, but, we see a clear support level here. I don't know what other stock is in the news these days. There's a whole bunch of them, clearly. I don't know, UNH. I think I saw something on United Healthcare Group today. And do we have something here? All right, well, you can see there that, this, 430 level, not exactly perfect, but pretty close. But we could find things that are, almost perfect. All right, let's look at domain and energy. I'm just randomly picking out stocks. All right. Now look at this. 79 or 80. Top in April, top in August. All right, so you want a trading idea? Well, if Dominion Energy gets up to around 80, there's a good chance it moves lower. I mean, you could, I think I looked at Johnson & Johnson today. Or was it now? It wasn't Johnson & Johnson. Was it Eli Lilly? Oh. All right, so now look at this. Here's another stock, Eli Lilly. This could be a trading idea. I mean, people always want to be like, oh, well, what are some trading ideas? Well, I got to wrap stuff up soon, so let me just throw some stuff out there that I may be thinking about for possible trading ideas. All right, so let's look at Eli Lilly. This was another important level. All right, 270, top in August, top in November, got above it. Where was today's low? Pretty much right there. 272. All right, so this could potentially be potentially be short, but I don't know. It doesn't really scream out at me too much. Let's go back to that Procter and Gamble that we talked about at the beginning. You want to look at a potential trade idea. Eventually, this thing is going to reverse. I mean, this is an unsustainable game. I don't care what stock it is. And I'm not saying that it's not going to be successful long term. What I am saying is that is probably temporarily out of equilibrium. This RSI indicator, or this monitor here at the bottom, shows shows conditions that could be overbought or oversold. So this shows that we're really overbought. This thing has gone almost parabolic. Actually, it has gone parabolic. I think there will be some kind of reversal in this stock. I'm not saying that in 3 years it's not going to be $500 a share, but I am saying that I think there's a good chance that with the next week or two, it drops lower. And if you're a put buyer or you like options, there's going to be something there for you. And that's in this sector, the staple sector. Going back to the beginning of our lesson, this flight to safety. So one of the things we talk about in the class is how do we take advantage of current conditions in the market to make money? When we first started talking, Rodrigo talked about like oil, how we talked about the oil bounce, back in late August. And since then, we got this other bounce. I'll bring that up here. And the message I want to convey is that, this is not, we're not doing complex mathematics here. We're not trying to cure a virus or, measure how much a star weighs. We're just seeing certain levels are more important than others. By having a knowledge that this 62.50 level was important, there were traders that bought oil down here on December 2nd. A week later, it was $10 higher. So now let's go back to this XLP. This thing is really overbought. This thing, in my opinion, is going to make a reversion. Are we going to guess when the top happens? No. How are we going to know? Well, we're going to wait for it to reverse. A potential way to do that is to just look at a trend line. So we know this thing is kind of primed to move, right? It's like a rubber band. It's really stretched out. At some point that rubber band is going to snap back. But here's the thing. We don't want to guess exactly when the snap will happen. We want to have a sign from the market. And a sign could be a break of this trend line. A break meaning if the price crosses it. Because what will this show us, right? In an uptrend, what is going on? Things are moving higher. If all of a sudden this price stops moving higher or starts going lower, on a chart, it's going to start being over here. it will show us that this trend line has been broken or violated or crossed. The first thing that happens when things stop going up is they stop going up. If the price goes sideways, it will cross this red line and it will show us this stock has stopped going up, right? I don't want to be facetious and oversimplify it, but we know this stock is going up. We don't want to get into it until we have some kind of good, decent evidence or conviction that it starts going down. I mean, this, it could keep going up and up and up and up and up. I mean, I don't think it will, but it could. It could go all the way up to here. I don't know, 81. I don't think that's going to happen, but could it? Yeah. I mean, who the hell knows? Some stranger things would happen. But if we wait for the price to cross this, for this trend line to be broken, the odds will be more in our favor. A trend line is not anything magical or mystical. It is a graphical illustration of the supply and demand dynamics. As long as the price action on this chart is above this red line, it is a graphical illustration that the price is going higher. And if the price is going higher, the bulls are in control. If this line gets crossed, it is a graphical illustration that the price is not going higher anymore. The first sign for a stock to go down after it's been going higher is for it to stop going higher. So some people get really confused with trend lines. It's like, should I, connect this or this price or the low price, the closing price? In the class I teach it, if you understand what a trend line is illustrating, you don't need to overthink that stuff. It will become much easier to use this type of knowledge to profit. So your basic trend line. So, you want to look for some ideas over the next, I don't know about tomorrow. I mean, tomorrow's Friday, but going into next week, I'm going to have, or as a class, we're probably going to be looking for potential short ideas here in the consumer staples sector. So
you will be basically following up with these trades for the students, like you do on the chat room you have there, right?
It's it's not even like we totally follow up, but it's like every day we look at this. And people say to me like, gee, you make these really great market calls, how do you do it? And I say, I'm not really making great calls. I'm just looking at what the market is telling me. We don't guess. We don't want to guess. If you want to guess, you're not going to be a good trader. We need to let the market tell us what to do, because the market is bigger than all of us. And no matter what we think, the market is not going to listen. For example, in this, let's just go back to this example here with these consumer staples. We know it's up. We know it's overextended. Okay. Are we going to guess? Oh, I'm going to sell it when it gets to 78. I'm going to sell it when it gets to 79. I'm going to sell it when it gets to 81. That's guessing. I don't know how high this will go. Maybe tonight is the high. Maybe a week is the high. But we wait for the stock we wait for the chart to tell us what to do. We wait for the stock to tell us what to do. When XLP crosses this line, there's a chance it's going to move lower. That's when we consider making the trade. So one of the main things I want to teach, Rodrigo, is that we should never guess. If you're guessing, don't do it. It's like, if you don't have a clear reason for getting into a trade, you're just guessing. Here, if you say, well, I'm going to sell it when it gets to 78, that's a guess. If you say, I'm going to sell it when this uptrend line is broken, maybe you're going to make a mistake. Maybe it goes down and it continues to go higher, but you're not guessing. You have a valid reason to make the trade. You can say, I'm not guessing. I'm placing my trade because the uptrend is broken. I have a logical reason to do something. I'm not telling the market what to do. The market is telling me what to do. And hopefully I understand what it's saying and we can make some money off of this. So we definitely, follow up on stuff. It's the class is like an ongoing narrative where we follow the markets, right? It's this ongoing thing. We look at SPY in pretty much every class because that's our main benchmark. So now what is the ongoing narrative? All right, well, SPY hit resistance and support. I think we're going into a downtrend. We had a really nasty reversal today. Apple looked really weak. I just showed you the whole flight to safety thing, which is typically happens at market tops. So what would I be thinking if we start heading lower? Where would I be looking for support? Remember, we go back to important levels. SPY had an important level back here, 453 in early September. We had this big sell-off earlier this month, which almost kind of seems like it, was like years ago, but this was only 2 weeks ago. Now, if we head lower again, there's a good chance we find support at an important level. For SPY, it's around 450 now. We kind of tightened it up. We said 453, right? But we tightened it up to the most recent important level, which is, I don't know, 453, 450. It's, we're talking about a few points within $450 here. So we can't get too precise. But anyway, if this downtrend continues, and my guess is it will, and I don't think SPY is going to get there tomorrow. If it does, it's all that's going to be on the news tomorrow. It's like, oh, the market crashed, blah, blah, blah. But it's only bringing us back to where we were 2 weeks ago. But if and when SPY gets down to here, and if it's overextended or oversold, now all of a sudden it's like, all right, well, instead of looking for short ideas, like now we're thinking about short ideas in consumer staples. Now it's going to be like, all right, well, where do we look for long ideas? As traders, Rodrigo, like, we should never fear the markets. We just want things to move. If things are going down and we have the right strategy, we can make money off of it. Things are going up, we can make money off of it.
I like that there's no emotions to it. That's something that retail traders do struggle with a lot. I know that I struggled with emotions starting when I first started trading. And I realized that happens when you don't have a strategy, when you're not experienced in the trade, in the craft, and you fall back to the emotions of it. And usually that's what kills most traders, right? The psychology of the trading part of it.
Yeah, like people get freaked out. Like, for example, say the market starts going lower. People are gonna be like, oh no, what's going to happen? The market's going lower. A savvy trader is going to be like, man, here's my chance to make some money, because they could look at puts, they could look at an inverse ETF.
That's why I was looking at a firm, because it went below that $100. Typically that $100, once a stock crosses that $100 mark, it's like meaningful. So I saw it under, and I've been waiting for a while to get back in for a long-term hold on this. So I'm just waiting to get a little bit of confirmation on a firm. Really, I know a lot of people in the chat room as well are on a firm.
Yeah. So now, I don't know what to say from a trading point of view. I think we'll probably get a little bit of a bounce, but the class even helps people that are long-term buy and hold strategies. Because if you want to hold this stock, a firm, I don't know what the future prospects are. Maybe in a year it's 500, maybe in a year it's 2,000. But I will tell you this: if back here in early November, you thought, well, I want to buy a firm, but it looks like it's a little overbought. I want to buy it, but I'm going to wait. Now you see it gets down to 100, and it's like, gee, well, that's an important level. There was support there before, resistance. So, all right, well, you buy it, and you hold on to it for 20 years. Use it to pay for your kids to go to college or whatever. But if you do the math, I mean, if it goes to whatever, 2,000, 3,000, 5,000, by buying it at around 100 versus by buying it at around 160 is going to be geometrically this massive difference. So even if you aren't a trader, even if you're not looking to scalp a profit or a day trader, knowing where the levels are can still benefit people that have a long-term perspective. It helps with your order placement. Let's go back. All right, let's look at a firm again. Say you said to yourself, man, I really like a firm. I don't know. I read a research report. I like this stock. I like what they do. I think they got a good business model. I'm going to buy it if it gets to, I don't want to pay 100. I'm going to buy it if it gets to, I don't know, 85, like down here. Right. So just say you want to buy it if it gets to 85, which would be this level there. Well, guess what, folks? There's a good chance a firm finds the support at 100, which for now it has, and rallies. And maybe you were right. And maybe it goes to 1,000 or 2,000 or 3,000. And you missed it for $2 or $5 or whatever it was, $15. You missed it. You missed what could have been a great investment. Why did you miss it? Because you didn't know that there was support at this level. Knowing where support and resistance is helps you with order placement. If you knew there's support at $100 and you think the thing in 5 years is going to be at 5,000, well, you don't want to miss it for a few dollars. And you would have said, well, gee, there is a support level. Maybe I should place my buy order just above it, because if it gets to support and finds support, there's a chance it rallies. So, knowing where your support and your resistance levels are can benefit any strategy. People might think, oh, well, that's all for day traders. That's all for short-term traders. But it also comes into play for the longer-term strategies as well. I mean, maybe someone who looks at a longer-term thing, might utilize a chart, I don't know, once or twice a year, 3 times a year. But the difference between where you buy and where you sell in the long run, it ends up being exponential, right? It ends up being like, I don't know, it could be over the course of 20, 30 years, could end up being like a couple $100,000 of a difference. So you don't need to micromanage it, but all right, it's like, all right, well, gee, I like a firm. And I don't mean me, I'm just saying hypothetically. Someone says, well, hey, you should buy this stock of firm. They got this great product. And you look at it in charts, like, all right, well, cool. I want to buy a firm, and say this is right at, I don't know, Thanksgiving. All right. So say you're at Thanksgiving with your, your brother-in-law who you hate, but he's really smart. So you listen to him. Oh, you should buy a firm. It's a great stock. And you look at the chart. Okay, well, all right, maybe I'll buy a firm, but it looks like it's in this downtrend. Where do I see potential support? Down around 100. All right, so I'm going to buy a firm, but I'm not going to buy it now. If it gets to 100, I'm going to buy it. Cool. What happens? The stock gets to 100, you buy it. Now, say your stupid brother-in-law who you don't like was right, and he goes up to 5,000. Well, if you bought it at 150, you would have made money. But if you bought it at 100, the difference over the course of these 20 years between buying it at 100 and buying at 150 or 140 ends up to be enormous. It's like, geometrically, or it's like compounding interest. So if you have a long-term perspective, I'm not suggesting you start day trading or you start doing this or that. But if you see a really, really, really clear trend, it might in the long run be worth it to factor that into your decision-making process. So I think one of the great things about our class here is that it benefits pretty much any trading style. It also benefits people that just want to learn about the markets. Like we have like some college students that, they're not even trading. They just want to learn about how trading really works versus what their professor is teaching them out of a textbook. So you probably get a lot of that, right, Rodrigo?
Yeah, there's definitely a lot of different type of traders, even people that trade options because they want to learn how to read the charts. And if you're trading options and you cannot read a chart, you're doomed to fail. There's no, like that is a recipe to blow up your account, guaranteed.
Yeah, we have a lot of, I would even say the majority of our students are more like day traders. And when I first started teaching the class, I didn't realize, how many, what percentage would be day traders, but there seems to be a lot. And that's cool because all the stuff that we teach applies on every level. So let's just say we're looking at this firm here. We pretty much went through it $100. We're looking at the chart from June through now. Let's just say we are day traders. We're going to go and we're going to look at the 1-day chart. What did this stock do today? This is just a chart of today. Well, what do we see here? Well, this black line is $100. We saw that this was important on a longer term trend, which is kind of, this particular example makes it easy because $100 is, such an obvious level, but just, this could be any level. This could be 98 or 99. Some levels are more important than others. So now if you're a day trader and you come into this, you're saying, all right, well, it's the morning. I'm going to go short because we started going into this downtrend, right? We're in a downtrend. And you say, all right, well, I think I'm going to go short here or buy puts or whatever it is you do. If you can take the short side, I think it's going to go lower. All right. I'm going to ride a lower. All morning you're making money. Now, all of a sudden it starts to reverse. And you say to yourself, all right, where might this thing run into resistance? Where would it be a good time to potentially get out of it? Well, we know the $100 level is important. So lo and behold, what happened? $100 became resistance. All right. So this is where you would have, if you were short, this is where you would have probably have covered. And then we can see from there, you could say to yourself, all right, well, we failed at the $100 level, meaning, when a trader says fail, it means it didn't get through it. And maybe you probably would have put in a short again here and would have rode this trend down. And then, you break this downtrend line. Now here's where you get long. And what happened at the close? We got right back close to this $100 level. So that's where we would have closed it out. So one of the things about the trading classes, the stuff we talk about is applicable to any style. It's almost even more applicable to day trading than other styles because longer term, if you're a fundamental investor, you think a stock is at 10 and you think in 5 years it's going to be at 50. You're not too concerned with important levels like a day trader would be. And, in our class, we talk a lot about the technicals, and that's pretty much what we focus on. When I say technicals, we mean using the market within itself to decide what is going to happen, like certain levels or what levels are important. When is a stock overbought? When is it oversold? This is the type of stuff that short-term traders look at. Right. So that was just a firm. I don't know. Let me just, before I sign off, let me just bring up another thing randomly. All right. So I'm going to bring up, I don't know. I just brought up Apple. Okay. Because Apple obviously is a well-known stock. I'm sure you've heard of it. I'm going to go to the 1-day chart. So now we are looking at a 1-day chart of Apple. And what do we see? Well, we see that there are certain levels that are more important than others. This is a 1-day chart. This just shows today. This is where Apple opened. Now, as a trader, I look at this, and the first thing I think about is levels. look at this right here. All right. I mean, look at that. It's uncanny. It's almost amazing. I don't want to say it's miraculous, so that's kind of sacrilegious, but for a student of the markets who's just getting started, I mean, look at this. So at 11:14 today, Apple finds a bottom around 174.30. Goes lower. Where does Apple find a top? Around 174.30. This is 150 in the afternoon. So even on a daily time frame, there are levels that are important. You can also see this up here. Sorry. Look at this, 175.30. That was the top at 11:27, 11:47, and 12:24. I mean, literally at 12:24, the top was 175.31. So how do you use this knowledge to your benefit? Well, all right. Well, say you bought Apple here. You're a day trader. It's 12:56, like 1 o'clock, you buy it at 173. It starts going your way. You say to yourself, well, where am I going to sell this? You know, what's my target? Let me look in the past. Where was their support? Well, there's a good chance that that level that was support becomes resistance. I'm going to have my target at the level that was support this morning, 174.30. You bought it at 173.30. Look at that. Okay, right there. Look at that. You know, you don't need to be a chart guru to see this. You know, we look longer term, how some levels are important. Now we're looking at literally a 1-day chart. And within the context of 1 day, if you're a day trader, there are levels that are more important than others. And we can see that clearly here. This 174.30 level was support and it turned into resistance. This 175.30 level was resistance. It remained resistance. You know, sometimes it doesn't happen like here, right? But, you know, it's a subjective thing that we do. We can see another important level down here. This is just a 1-day chart. Okay, so 3 o'clock in the afternoon, Apple bottoms around 170, makes a little bit of a rally up to 172, starts to sell off. Now it's 3:15. You're a day trader. You can say, well, you know what? Apple found some support around this level, you know, half an hour ago. Each one of these rectangles is 1 minute. So this is we're talking about from 3 o'clock to 3:15. But if you're a day trader, this is the type of stuff that you do. All right, well, 15 minutes ago, Apple found support around 171. I'm going to buy it. I think it's might be supporting again. You were right. You ended up, making this move here. Look at this here. What was resistance becomes support. So now we're in the last, 2 hours of the market. We're looking at 1 minute intervals. We saw how this level that was support remained support. Now look at how this level that was resistance at 3 o'clock, 172, becomes support right going into the close around 355. So another example where resistance becomes support. So Rodrigo, I got to start getting ready for tomorrow. I didn't realize how much time had passed.
Yeah, I mean, we did a 1 hour over, so definitely appreciate that, Mark. But go ahead and let us know. Give us some closing remarks on why you think the folks here should join you on the trading school Monday to Friday.
I think there are two main reasons why the folks should join us. Okay, one is your teacher, being me. I'm not good at self-promotion, but I have a lot of experience. I worked for two of the greatest money managers, not even now, but in history, Steve Cohen, Mario Gabelli. Obviously, I learned a lot there. I became the head trader at three different institutional money managers. This goes over a 25-year period. And then about 5 years ago, I made the decision that the institutional money manager world sucks, because it does. It's really changed. And I wanted to leave it. And I didn't really know what to do with myself. I was kind of thinking about doing like, I don't know, what can I do? Like, charity work or nonprofit stuff. And then it kind of just occurred to me one day, it's like, gee, what could be better than teaching people how to make money for themselves? Because then they can do all the good things that come with money, like, paying for their kids to go to college, or, donating to your local charity. So, I have a lot of experience. I know all the strategies. Well, not all of them, but, I've seen them all. I have a lot of experience, and I try to keep it focused on common sense. The other thing too is we have this real-time application to the markets. Like, we just spent the last half an hour looking at, not Apple a year ago, where we can say, oh, gee, look how a year ago I was right. It's like we look at things in real time and we talk about the markets. And some of our students don't even trade. They just really like knowing what's really going on in the markets versus, what they hear on TV and maybe those students are waiting for a particular time. But I think the two things that differentiate us is, one is, your professor, me, Professor Dr. Mark. I say that, sarcastically. And two is, we're looking at the markets in real time. Anyone can be a guru with 2020 hindsight. Anyone can find a chart. Oh, last April, I said this was going to happen. Here's my chart to prove it. So I think those are two things that really differentiate us, Rodrigo, is, experience, like depth of experience and real-time application.
Absolutely. And I know a lot of people that have had some impressive results, even just paid off their subscription in like a day or two. But, it's no reason to overcomplicate it, Mark. There's a lot of people, a lot of, YouTuber, all these kids on TikTok that want to make it look so simple. And, that simplicity brings people into the market. And then unfortunately, they get hurt, they lose money. And I just wish I had something like this when I started trading, something like Monday to Friday, like, with recorded sessions, like office hours, Q&As, all that stuff. It's like way like above and beyond, to be honest.
All right, cool, man.
Yeah.
All right, well, I'm going to sign off because I got to get ready for tomorrow. There's a lot to talk about, as we've seen. But thank you, everyone, for tuning in. And if you have any questions or any comments on the user experience, please let us know.
Absolutely. And I'll stay here for like a minute or two, guys. If you have any questions on the trading school, there's a 7-day money back guarantee. I'll show it to you guys here quick.
All right. Have a good night, everyone. Thank you.
All right, Mark. Okay, guys. So let me open the chat to see what you guys are asking. So as you can see there, you're welcome, GB. Yeah, great session. Absolutely. And I mean, Mark does this every day. So this was just like a little bit of a sneak peek of what's really happening in the trading school, because remember, you have the trading chat room where Mark is posting his ideas, and then you have the chat room where the students are posting their ideas. You have the quizzes, all that stuff. I'll show it to you here really quick. Let's see. Okay, chat rooms. Let me zoom in there. So you have class files. You have all the quizzes there for all the chapters. Okay, so you can grade yourself. All right. You have a general chat room, student trade idea chat room. Dennis, the course is it's rolling, right? If that's your question, like how long is the course? It's rolling. Education in the markets is it is a lifelong process. So basically, next year we're not going to put the same classes. We're going to re-record them. They're always going to be live, and it's better because that way you guys can interact. We have a chat room in the live session, and you can ask your questions about the lesson itself there. And Mark is there looking at the chat room and everything. So student trade ideas, you see, you come here, you post your research, your trades, your setups, you talk about it with your fellow classmates, all that stuff. And you see there's another one. There's different chat rooms, and you're going to be able to have access to all of them, including Mark's chat room, Mark's trade ideas, this one right here, Mark's trade ideas. So zooming out back, video library. This is where a lot of people that can attend the class hang around, because this is where you'll have access to all of the prior recordings in that particular page. This is the live class. This is where everything will be. Whenever there's a live class, you're going to see it there. So Dennis, the subscription is for a year, but obviously, you know, the education is a lifelong thing, because next year we're going to be looking at that current market. So you could call it, you know, an academy, you can call it a mentorship program, you can call it a trading community. It's all of those things combined, basically mentorship, feedback on your trades, and being able to understand the markets from the perspective of a hedge fund trader, portfolio manager, not, you know, from the perspective of retail traders. GB, send me an email for that, and I can set that up for you. Just send me a quick email and I'll help you after the session. All right, guys. So I'm going to post my contact in the chat so that if you guys have any questions, you can reach out. Today was a great lesson, so I appreciate you guys being here with us today. Very great. Awesome. Thank you for tuning in and for taking care of your education in trading. Very important, guys. So I'll drop the link there. You're welcome, GB. I'm closing the stream. Reach out if you have any questions, guys. Thanks a lot and have a great evening. We'll see you guys next time.